Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivatives data on Nifty, Bank Nifty, as well as the different asset classes. Now friends, let us first discuss what we have mentioned in our last video. In our last video, we have mentioned that Nifty has rallied in a 90-degree manner, Nifty and Bank Nifty. The rally was in a very short span of time, that is in a 9 trading sessions, and after that we were expecting some sort of profit booking at the higher levels, but as well as we were expecting any correction should be used as a buying opportunity. So we were expecting if there is a correction, one should buy, and we there could be an extension of that particular rally, but that didn't happen. Market went into a consolidation, and that consolidation was very difficult to trade for both the traders, long traders and the short traders. Both the traders got hit by the stop losses on the either side. Still, the primary trend is positive. So now let us go to the Nifty daily charts, and we will try to figure out what could be the trend for the next week, and where Nifty is expected to test the highs or lows in the next week. So now let us check out the Nifty daily charts. Now this is the Nifty daily charts. You can see now this channel we have been discussing since last four months. After that, we have seen that on 11th April we have seen a breakout. Then after that, we have seen a pullback. Now let me go to the hourly chart so that we can have a clear view of what kind of trend we have seen in the last week. This was, the triangular pattern where Nifty traded throughout the week. The support range was 7,553. So Nifty traded in a tight range. Most probably, I would call it as a stop loss hunting trade. The traders, those who went long, stop loss were triggered, and the traders those who traded short, and those traders stop loss were also triggered on the upside. So it was highly difficult to trade, and it was highly difficult to generate profits from this particular trading in the last week. So now looking at this particular pattern, we have seen that Nifty is on a verge of a triangular breakout. You can see once Nifty crosses 17,680, then we might see Nifty rallying towards the swing high, which was almost the highs of 17,863. And if it sustains above that, then there could be an extension of the rally. But as of now, last week was a consolidation week, and we are expecting a breakout on the upside. Now, most probably, as I said, that Nifty was on a verge of a breakout on the upside. So now, let us discuss the important supports and resistance in the Nifty for the next week. The first support in the Nifty is placed at 17,553. Below that, the second support is placed at 17,451, and below that, the third support is placed at 17,312. On the upside, the first resistance is around 17,717. Above that, the second resistance is around 17,828, and third resistance is around 17,924. These are the crucial supports and resistance level in the Nifty. Traders just should follow this particular levels and try to trade in the direction of the breakout, which is we are expecting on the upside. But as I said, any dips should be used as a buying opportunity, and until and unless Nifty doesn't crosses and closes above 17,860, which was the swing high, almost that particular high, traders are suggested to trade in small moves. Do not try to catch a huge moves. Just try to catch 70 to 80 points in Nifty and 150, 180 points in Bank Nifty, and just trade on both the sides. But trade with stick stop losses, because after a breakout in the triangle, we might see again a pullback, and after that we might see the extension of the rally. So pullback might come, so one needs to trade with the stick stop losses. So friends, now let us check out the derivative data of Nifty. You will see on the screen the Nifty option data, which is Nifty calls. In Nifty calls, the action was seen in 17,600 calls, 17,700 calls, 17,800 calls, and 17,900 calls. Here you can see there was rise in the volumes, rise in the open interest, implied volatility is highly low, and there has been a minor change, I mean to a negative side in the option premium. Implied volatility, once I would like to again point out that last week also IVs were very low. We were expecting a bounce back on dip, but though the IVs were low in the Nifty calls, Nifty did not rally on the upside. The bounce back what was for short while, again selling pressure was seen at the higher levels. So as I said, here looking at the implied volatility, again I am mentioning that these are the bullish sign, but now one should follow the patterns on the Nifty hourly charts. Once that Nifty crosses and closes above at least 17,700 mark, then there could be an extension of rally. Before that, we might see huge volatility coming into the markets. Looking at this pattern, we feel that on immediate basis, 17,700 could act as a major resistance. If it sustains above that, then we might see an extension of rally towards the level of 17,900. So most probably data is good, but there is a barrier which is 17,700 on the immediate basis. So friends, now let us check out the Nifty put data. In Nifty puts, you can see the action was seen in 17,500 puts, 17,400, 17,300 puts, and 17,200 puts. Here also you can see there has been a rise in the open interest, rise in the volumes. Here also implied volatility is a little bit higher than compared to calls. It is between 9.60 to 11.97. The percentage change in the option premiums are slightly negative, so nothing much there seen in Nifty puts. Some sort of put writing is seen here also, as well as some sort of call writing was also seen in Nifty calls, but that was highly negligible. Looking at the percentage change drop in both the options premium in calls and puts. So as I said, next week also could be highly volatile. We are expecting a breakout of that particular triangle pattern, but until and unless Nifty doesn't sustain above 17,700, this rally could be of short while. Selling might come at the higher levels and support might come at the lower levels also. Now looking at this pattern, we feel that looking at to the volume concentration on the downside, 17,500 could act as a major support. So if Nifty sees any kind of cool off near 17,500, 17,500 is the area where one should go long, and until and unless Nifty doesn't closes above 17,700, one should try to book profits at the higher levels, and if it sustains, then again one should try to go long, depending upon the market trend. So most probably, what I say or what I would like to suggest is the view should be buy on dips, but do not play for huge moves. Just try to play a move of 0.5% in Nifty and Bank Nifty. So friends, now let us check out the Bank Nifty daily charts, and we'll try to figure out what could be the trend for the next week. So now let us check out the Bank Nifty daily charts. In Bank Nifty daily charts, the similar kind of pattern was seen. You can see a sideways range bound movement. Again in Bank Nifty also, let me go to the hourly chart so that we will have a clear view. This is the hourly chart of Bank Nifty. Now let me draw a triangular here also, so that we get some sort of levels where we might expect a breakout from this particular triangular pattern. Now this is Bank Nifty. Now you can see it was stuck in this particular range throughout the week. It was highly difficult. It was, most probably last week was favorable for the option writers, those who are writing calls and puts. The most probably the trend for the last week was of purely of theta decay. So until unless Bank Nifty doesn't closes above 42,385, we might see Bank Nifty trading in this particular range, and this kind of pattern could be seen next week also. So looking at this particular pattern, we feel that we should wait for this breakout about 42,382 in Bank Nifty on the spot levels. Then only traders should try to build long position. On the downside, the crucial support for Bank Nifty is around 41,000, most probably 41,900. If Bank Nifty closes below 41,900, then we might see that Bank Nifty might drift down to the levels of 41,700 mark, which is this support line, which was earlier resistance. Let me show you. This was the resistance lines, and that would become support at this juncture. So most probably Bank Nifty is also stuck in this particular range, and we should wait for this particular triangular breakout. Until and unless Bank Nifty doesn't break 42,385, one should uh, trade in this particular range. And on the downside, 41,900 could act as a support for the Bank Nifty for the next week. So friends, now let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 41,799. Below that, the second support in Bank Nifty is placed at 41,500, and below that, the third support is placed at 41,139. On the upside, the first resistance in Bank Nifty is placed at 42,382 is the first resistance. Above that, the second resistance is around 42,603, and third resistance is around 43,005. These are the crucial supports and resistance level in Bank Nifty. Traders should try to just look out for these levels and trade in the direction of the primary trend. So friends, now let us check out the derivative data of Bank Nifty calls. In Bank Nifty calls, the action was seen in 42,300 calls, then 42,500 calls, and then 43,000 calls. Now here you can see there has been a significant drop in option premium. There has been a rise in the open interest. There has been a rise in volumes. Implied volatility is between 10.79 to 11.70. So the implied volatility is low. I would not say that it is in danger zone, but looking at this data, we feel that smart money has tried to just write the out of the money calls. So the on immediate basis, 42,300 could act as a major resistance. Once it sustains above those levels, then we might see a rally towards the level of 43,000. So on the immediate basis, 42,300 could be the immediate resistance. So now let us look out for the Bank Nifty put data. In Bank Nifty puts, you can see the action was seen in 42,000 puts. Below that, 41,500 puts, and below that, 41,000 puts. Now here also you can see there has been a rise in the open interest. There has been a rise in the volumes. The implied volatility is slightly high, between 13.49 to 15.42, and there has been slightly long built up in Bank Nifty puts. It is not that much strong, but looking at this data, that we might see some sort of pullback or some sort of cool off from these levels. So on immediate basis, the first support in the Bank Nifty could act around 41,000, and below that, the next support is around 41,500. So looking at this particular data, we feel that on the immediate basis, we feel that 41,500 could act as a major support range of this particular whole range of 42,000 to 41,000, because the second highest volume concentration is around 41,500. But until and unless Bank Nifty doesn't break 41,900, we won't see 41,500 coming in the next week. So one should look out for this particular range, and any dips should be used as a buying opportunity from this data point of view. So overall, looking at the charts, the derivative data of Nifty and Bank Nifty. The strategy would be buy on dips. We are expecting a triangular breakout in Nifty as well as in the Bank Nifty, but one should focus the range which we have mentioned, the breakout range which we have mentioned in our video, and just try to play for small moves. That is half a percentage move in Nifty and Bank Nifty, and one should trade with strict stop losses. So friends, now let us come to the final segment of our show, which is positional call. I have identified one stock from PSU banks. The name of the stock is PNB, Punjab National Bank. Let us go to the daily charts of Punjab National Bank. Clear view of this particular stock. You can see the stock has corrected sharply from the levels of almost 62. It has taken a pause around 44. Now this downfall was in a downward falling wedge. Now whenever there is a breakout from this wedge, we expect the price are expected to see a sharp move on the upside. Wedge, downward falling wedge breakout are very sharp in nature. That means one can expect a sharp rally in Punjab National Bank in short to medium term. Short to medium term, maybe next 3 to 4 months. Just try to show you that the stock has taken a pause near its multiple support zone. Let us go to the weekly charts so that I can show you. Now you can see this. You can see this particular horizontal line where near 44.35. Earlier it was major resistance 1, 2, 3, 4, and 5, and 6, 7. 7 times stock has taken stock has seen resistance around 44 mark, and after a breakout again it has taken a pause around 44 mark. So this could be a very strong area where buying could emerge, and it has already emerged. So any dips should be used as a buying opportunity in the stock. So looking at this pattern, downward falling wedge, we are expecting a breakout from this particular range. So any dips should be used as a buying opportunity. So for short-term investors, swing traders, positional traders, one can accumulate Punjab National Bank in the range of 48.25 and on corrections to 46.90 for an upside target of 55 to 56 in short to medium term. Short to medium term means maybe 3 to 4 months. The stock has potential to test its swing high or 52-week high of 62 also, but that might come in next 12 to 18 months. But as of now, looking at this pattern, we are expecting stock to test the levels of 55 to 56 in next 3 to 4 months. So investors can buy the stock in the range of 46.20 to 40. The stock investors can buy this stock in the range of 48.20 to 46.90 for an upside target of 55 to 56 in short to medium term. So friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.